Good morning, students. In previous class, we have discussed about the services. There are three types of services: business services, personal services, and social services. In this chapter, we will discuss about business services. First service is banking. Banking plays an important role in the economic development of the nation. According to Banking Regulation Act 1949, it defines the term banking as the accepting for the purpose of lending or investment of deposits of money from the public, repayable on demand or otherwise, and may be withdrawn by check, draft, or otherwise. In simple words, we can say that bank is a financial institution which accept money on deposits, repayable on demand, and also earns a margin of money by lending money. So bankers are not merely money lenders. A bank lends what it borrows from others. A bank is buyer and seller of the money. Now what are the types of banks? There are four types of banks. First is commercial bank, then cooperative banks, then specialized bank, and then central banks. So first is commercial banks. A commercial bank may be defined as an institution which accepts deposit of money from the public for the purpose of lending or investment. These are governed by Indian Banking Regulation Act 1949. There are two types of commercial banks: public sector bank and private sector bank. First is public sector bank. These banks are owned, managed and controlled by government. They emphasize more on social objectives as compared to profit motive. In 1969, 14 banks were nationalized by Government of India. In 1980, another 6 banks nationalized. Total 20 public sector banks are in India. For example, PNB, SBI, etc. Next is private sector banks. Private sector banks are owned, managed and controlled by private promoters. They are free to develop their own policy decisions regarding banking operations. 34 private sector banks are there in India. For example, IDBI, ICICI, Dhanlakshmi Bank, etc. ICICI Bank is the largest private sector bank in India. Second bank is cooperative banks. They are governed by the provision of State Cooperative Societies Act. It is an important source for rural credit. The main objective of these banks is to provide credit to their members on easy terms. Next is specialized bank. These are organized to render specific services to the public. For example, foreign exchange banks, industrial banks, export-import banks, etc. Fourth is central banks. Central bank controls and regulates the operation of all the commercial banks in the country. It acts as a government banker and controls the currency and credit policy of the country. The Reserve Bank of India is the central bank of our country, which is established in 1935. So these are the four types of banks. Now we will discuss about the functions of commercial banks. There are two types of functions: primary functions and secondary functions. First is primary functions. In primary functions, first is accepting deposits. Accepting deposit is a primary function of commercial bank. A commercial bank accepts deposit from the public who have surplus money. It accepts deposit from the public in the form of fixed deposit, saving bank deposit, current deposit and recurring deposits, etc. Second is lending of funds. The another main function of the bank is to provide loans and advances out of the amount received through deposits. It is the main business of commercial bank, and the interest charged on such advances is the main source of income. It may be in the form of cash credit, overdraft, discounting of bills, term loans, etc. Secondary functions. It includes agency services and general utility services. Agency services are offered to the customers and general utility services to the public. First is check facility. Collection of checks is an important service provided by the bank to its customers. It is considered to be the most convenient and inexpensive medium of exchange. There are two types of checks: cross checks and bearer checks. Cross checks are those checks which are in cash through account only, but bearer checks are in cash at the bank counters. Second is remittance of fund. Transfer of fund from one account to another is made possible by issuing demand draft. Here is a specimen of demand draft. Third is allied services, or you can say personal services. In addition to the above mentioned functions, bank provides so many services like payment of insurance premium, telephone charges, etc., and the collection of dividend, interest, etc. So these are the functions of the commercial bank. Now next topic is e-banking. What is the meaning of e-banking? E-banking means banking using the electronic media. E-banking is a service provided by many banks that allows individual and business enterprises to conduct banking transactions like managing savings, checking accounts, applying for loans, paying bills, etc. over the internet. Any user can get connected to the bank's website to perform banking operations and the services with the help of a computer or mobile phones. There are so many types of e-banking services like EFT, POS, EDI, credit cards, etc. Now, what are the benefits of e-banking? There are so many benefits of e-banking. First is anytime service. E-banking facilitates 24 hours a day into 365 days a year services to the customer of the bank. Second, anywhere banking. Customers can make some of the permitted transactions from office or house or while traveling, even through mobile telephones. Third is creates financial discipline. Recording of each and every transactions develop a sense of discipline. Fourth is less risk and greater security. It provides greater security to the customers as they can avoid traveling with cash. Last is workload on branches reduced. Through e-banking only, workload has been reduced on the branches. So these are the benefits of e-banking. So we have completed the topic banking, in which we have discussed the meaning of banking, then types of banks, then functions of commercial bank, and then e-banking. I hope now you have understood the topic. Thank you so much.